Good afternoon, everybody. It's about 2:30 on Friday. Today is December 22nd. Hope everybody is well. Markets did well again today, so I don't think most of you guys have anything to complain about. This has been a strong moving market for most part. NASDAQ up about 30 points, about 0.2% up today. S&P 500 about 8 points, 7.88, but 7.17% up. Dow Jones was a little bit down, about 18 points or so, about 0.05%. So not bad overall. Markets are still not losing dramatically, given how high they've gone for the last few weeks. This was to be expected, a week that was light, but because of the fact that it is close to the Christmas holidays and New Year, you'll see light volume anyway. So that was to be expected. And today was a light trading day as well. So people folded up a little bit early. It was Friday on top of that. So you should expect the volume to be very, very little. All right, so let's talk about one of the companies that showed up in this radar for me, which was Yelp. Now, most of you probably have heard of this company. Yelp is a website operator and an app that allows you to be able to rate. Initially, they started with restaurants, and now they've moved to rating any kind of a small, mid-sized business as well. So whether it is a dentist or whether it is a salon, you'll find ratings for all of them on Yelp. How Yelp makes money is by advertisements. So when you go, for example, to Yelp and you look for a review and you type, for example, restaurant in Bellevue, Seattle, you will find that the top 2 or 3 listings are sponsored listings. These show up high on the radar screen so that there are companies that are interested in getting sponsored to be able to let other people know, the consumers know, that they also are a available system or service in that particular region. So Yelp operates in the digital advertising space, primarily targeted on small and medium businesses. Now, just to give you a little bit of context, let's broaden the horizon as if overall. The last year and a half to 2 years have been tough on the digital ad spending market. Google's taken a hit. Their revenues were down. Meta has actually done well, but they've optimized their spending better than they've necessarily grown top line very well. Yelp is actually a smaller company, competes with the people equivalent of a Pinterest or a Snap in that range. They're much smaller, obviously, about $3 billion in market cap, much, much smaller business. Google is probably the most likely competitor for Yelp. People would just go to Google and type a Google search, restaurant near me. And now Google allows the restaurants to be able to have reviews done on Google itself instead of having to go to Yelp to do it. So they do compete in some ways, but not so much in revenue as much as in the attention for people to be able to rate and review people. Yelp has been through a lot of stuff. This is not a new company. It's been around for a long time. So that's the context. So ad revenues having gone down over the last couple of years, we'd ask, why did it show up on the radar? So let's go find out why it showed up on the radar and also how it is doing. Overall, I think the ad market should do better in 2024. Overall ad market, but not necessarily sure the SMB ad market is going to do very well. Ad market next year will do very well because of elections. Political spending on US advertising digital is expected to get to about 18 to $20 billion, the highest it has been ever, given that every year is getting bigger and bigger. So you should expect to see ad market do well, but the biggest beneficiaries of that, I think, are going to be Google, Meta, maybe Amazon, but more likely it's going to be just Google and Meta. So let's continue to find out what our 5-step process involves to be able to give us information about Yelp. All right, so we start with an annualized basis. The company was doing about 700 million, growing at 30% in 2016, and 8 years later, about $1 billion. So it's not growing very fast. It's growing only about 30% in 3 years, in 8 years. Sorry, that's not terrific. About 30-40% it's what it's grown. That's not great. So look at this. It went from the 30s to the 20s to the 10s to the single digit to the negative, and then very good growth on 2021 to 18-20%. So you think that it'll go back, but it's going back to slowing down. It's not a good sign. 70-80% gross margins, that's a good sign. So overall, I don't like the long-term outlook. This company has been growing very, very slowly. This is not a stock that you would expect to go to the roof very quickly. Okay, so 1 billion, really, say, my God, this is 80% gross margin, 80% plus gross margin ad business. So you'd expect that perfect business to be operating in. And net margins have been messed up. They were going down, and yeah, they're in the single 5% range. Not great. You'd expect them to do a little bit better, but that's bad. Okay, so 19%, 16%. This has come down quite a bit. So this is slowing down again. Look at this. It went to from 19 to 16 to 14 to 13 to 12 and to 11 now. So It's still going down. Don't know why it showed up on the radar, to be honest. 80%. And then, okay, so this is the reason why. Year over year, they're getting a lot more efficient. The year of optimization is coming even to Yelp. They've done a very good job for the bottom line. The bottom line has gotten much, much better. Now nearly 12 to 15% bottom line this quarter, the most recent quarter, and expected to continue to do that, I would imagine. That's one of the reasons why. So on a scale of 1 to 10, I would say the income statement is about a 5. Total assets in the $1 billion range. Half of it is in non-current assets, probably in goodwill, I think. Yeah, most of these companies tend to have a lot of goodwill. No, they actually don't. They have it in intangible assets. Okay, that is equivalent of goodwill. Look at that. Yeah, goodwill. They probably acquired somebody or some other nonsense. Okay, so 500 million in cash, but 100 million in debt, manageable debt, not a big problem at all. Cash flows, okay as well. They have enough free cash flow to support the operations. Look at their valuations and margins. 38 times PE for a company growing in the 11% in the last quarter is what we saw. Okay, which is what even Microsoft and Apple are doing. And you look at Google, so let's look at Meta, just to give you a little bit of a context. That company is much bigger. Obviously, revenues are much, much higher, but revenues are growing in the single digits for Meta on a scale that is, or even double digits, I think, for Meta, but on a scale that is phenomenal. And their PE, if it comes up in a little bit, is in the 31 range. So lower. Meta has a lower PE ratio. Let's see how they're growing. Meta's most recent income statement says growth is Meta's growing faster. Yeah, so in my mind, if you look at Yelp, the valuation, even for Meta, is pretty darn rich. So this is a little bit, it's not rich. Let me back up. It's not rich. It's not a good value in some senses. It's not giving me the kind of value that I would expect it to go. So 31 growing at 23%, 38 growing at 11%. Come on. Price to sales is okay. 80% gross margin, 16% net margin. So this should improve on an ongoing basis. Meta is very similar, 80, 90% gross margins, 20% net margins, but they've optimized, and these guys are just beginning the optimization, which is probably why Yelp is starting to show up on the radar. So on a scale of 1 to 10, I'd give it a 6. I'm not going to go jump in with a big position size, but it definitely showed up as a company that I should be watching for a trade. So let's see what happens. All right, so went through a classic stage 1, stage 2, stage 3 decline, then consolidating. It's still consolidating in a very large fashion. If you want to think about it, it's still in the consolidation phase. Look at that. This was just consolidation, consolidation, consolidation. So it has to break out of this range for it to start saying, yeah, this is going to really go up dramatically. But otherwise, right now, I would say the big reason why it's showing is probably because it's close to its 52-week high. Look at this. The last time I hit this price was 2018. So it's a 52-week high and a multi-year high. So if it breaks out of this range, then it's got a little bit of movement, at least up all the way to the 51 range and to the 55 range, which is again a multi-year high. This would be good if it does break out, which I think it has been doing consistently. So on the shorter time frame, you can see on the monthly chart, very nice bull flag. That's the reason why. Look at this. So this is a very nice green candle and a bull flag. Let's draw that. That's the bull flag. That's the reason why the green candle after that is going up. So on the short-term basis, post a bull flag, this is ready to go up. On a weekly chart, let's look at the monthly. We looked at the monthly. Look at the weekly chart. Look and see. You can see beautiful bull flag on the weekly chart as well. Very strong move up. Since then, this is the weekly chart showing you that this is actually going up. RSI seems to be on the weekly a little bit towards the top end of the funnel, but still very manageable. And MACD is still not showing a lot of momentum. So this has gone through a lot of changes and challenges. It's tried and attempted a bunch of moves and then fallen down back again. So this is the first time it's actually broken out of this big resistance point, which was the 43 resistance point, and also breaking out of this 39 resistance point somewhere in the 23 timeframe of May is not bad. So it's still on a bull flag and a single candle rise up on the Yelp side. Okay, let's keep going. So this, which was previously their big resistance point, should become support. So maybe a little bit lower, somewhere in the 43 zone, would be a very good resistance point. Yeah, this would be a good resistance point. It's a little bit stretched, not too much, but a little bit stretched on the RSI. So you would expect a little bit of it still has room to go. So I think is clear for me from this video. And the chart says it's still room for it to go. This has done a good job. They've done a good job, reasonably good job, I would say, of being within the zone respecting the trend line to a large extent. Let's draw that a little bit tighter. That's the beautiful trend line. Here's the bull flag, and here was the pole of the flag. There you go. So very good move. Done a very good job. All the moving averages are pointing up and to the right. This is flattening out a little bit, but the 20-day moving average is strong move up. This is a little less so. This is even a little less so. This is flatter. So MACD is almost dead. Let's see. Oh, there you go. That was a problem. Yeah, this is a good sign. Yelp is going to go higher, guys. It might take a little bit of a break and come down maybe with I would keep a resistance just for myself to be safe on this 4660 zone. Sorry, not resistance, stop loss. If you want a stop loss, this is probably a good stop loss. Wait for it to come down maybe a little bit. It is consolidating. The overall market has been doing very, very well. So next week, I would expect it to go into the 50. There's definitely for it room to go all the way to the 56 zone, which is one resistance point, which will be a multi-year high anyway. It's already an annual high. This is going to be a multi-year high in the, let's see, if it goes beyond this, where does it go? If you had to move this out a little bit and take it out over here, then you would see that the next logical point for it is probably the 52. And then even if you go beyond that, it's 52, 57 zone. There's room for it to grow. I really like Yelp, but from a technical perspective, the fundamentals are still okay. 5, 6 out of 10. Technically decent setup, not a great setup, but a decent setup. It is going to go a little bit higher. I know that for sure. See if the stop loss for you works at 46.7. That's what I'm going to do. And then move up all the way to the 52, 57 zone. I would actually take profit a little bit quicker on this one, 52 zone. This doesn't move very quickly. This isn't 10%. And this is not like Upstart or Affirm or Caravana or any of those stocks. So take profit a little bit more quickly, 5 to 7%, 3, 4 days, so maybe 2 weeks or so. It should work out very well. Thank you very much for following me. Thank you for subscribing to the channel. Please recommend the channel on Twitter. So this is one thing I ask of you. Can you please recommend or tell everybody else about the channel on Twitter? It helps me grow my audience. Thanks, guys. Have a good weekend. Have a safe Christmas, and I'll see you in the new year.